Now, tax collections are robust. Taxpayer base is, yes, it is expanding. But the government is also quite keen on reduction of fiscal deficit. And they want to maintain CAPEX momentum as well. So with all of this in play, does it leave enough room for tangible changes in our tax structure? Is relief likely for the middle class this time? Or is there more disappointment in store? We're going to discuss this with the experts joining us. But first, let's get you an exclusive report. This is a report that my colleague Prakash Priyadarshi has filed, and he's tracking what could be in store by way of the CAPEX plan of the government this time. This is his report.
Yes, we have been informed that no major changes are expected in the capital expenditure target, the forthcoming union budget. Sources are informing that the government is likely to continue the CAPEX target announced in the interim budget. Some minor tweaks are expected based on the ministry's demand. As you are aware, that the government has allocated rupees 11.11 lakh crore CAPEX target in the interim budget, which is likely to be continued. Some key sectors like agriculture, rural development, railways, housing, road transport and highways will continue to get high allocation. Along with that, the sources are also informing that despite high allocation to some key sectors, the government will maintain the fiscal discipline roadmap in the budget. The fiscal deficit target to be retained at 5.1% for the financial year 2025, in line with the interim budget, and the government will stick to the fiscal roadmap to achieve 4.5% deficit target by the financial year 2026.
All right, so that's as far as the fiscal deficit target is concerned, and we're talking about the CAPEX plans that could be underway right now that the finance minister would be considering. We had a chance to speak to economists and several industry voices as well, just to take stock of what is expected in the upcoming budget, and from the fiscal prudence perspective, how the focus could be on the rural economy this time. This is what we got from Goldman Sachs and Nomura. Listen in to what we've got from them.
Macro stability has been the hallmark of India over the last 10 years or so. So if you compare it to Deepa versus now, all the indicators that you pointed out, current account deficit, lower inflation under control, the fiscal, I would say, which expanded during the pandemic, but frankly, India wasn't an exception because all other countries also expanded their fiscal during the pandemic, is on a path of consolidation now, and we expect that to continue. Because if you look at overall, stability dynamics, the only place where India is an outlier is the debt to GDP in terms of public debt. It's at 80% plus. It's one of the highest amongst EMs. Agreed that we have high growth, but over a period of time, that debt to GDP number needs to consolidate to below 80% and probably get close to 75, which is why we think that the government is very likely to stick to the fiscal consolidation path and target 5.1% of GDP in fiscal 25. But the more important thing is that going forward, also we expect that consolidation to continue towards 4.5 or lower fiscal deficit for the central government.
Our view is that in the final budget, they'll probably increase that from 3.4 to 3.5% of GDP. So I think CAPEX is going to be an important part of not just the next budget, but also the government's vision over the next few years. I think the key challenge for India is a broad-based recovery on the private CAPEX side. I think one of the alarming pieces of news that we've got over the past couple of weeks or so is the CMI data on new investments, which actually on a 4-quarter rolling basis has fallen to a little over 7% of GDP from around 10% of GDP in Q1. So this is Q2 calendar year versus Q1 calendar year. And so I think the bigger question is the broader recovery of private CAPEX in India and the start of that CAPEX cycle. But I think focus on public CAPEX is going to be paramount in the coming years.
So if CAPEX is going to be of paramount importance, where does that leave any kind of tax relief for taxpayers at this point in time? And how about expanding the tax base as well? How is the FM going to maneuver the kind of targets being set on the fiscal deficit front. Let's discuss this. Siddhartha Sanyal is joining us. He's Chief Economist and Head of Research at Bandhan Bank, and along with him, Sumit Sighania is with us, partner at Deloitte India. Gentlemen, thank you for making the time for joining us on India Tonight. Mr. Sighania, these tax collections, we are saying, they are certainly strong. Fiscal deficit around 3% of its full-year target. RBI giving a big dividend payout to the government. And now we are hearing about the IMF having raised India's GDP forecast. So this budget, now the question is, should the government go after fiscal prudence and cut deficit further? Should they increase CAPEX, like many are expecting, and build more infrastructure? Or should they, like the common man would hope, give some relief on taxes? What's your take?
Thanks, Vikram. And probably an easy answer to give will be that the government will have to do all of that, not probably just do one or pick one versus the other. But if I just talk about the tax proposal that one can expect from this budget, right? A couple of things. One would be for corporate taxpayer, there is a general expectation that some of the concessional tax benefit which have sunset on 31st March 2024, those needs to be rolled over, right? If I talk about manufacturing sector, for last 4 years, we have had the benefit of 17% corporate tax rate for manufacturing unit that gets set up new, right? That benefit has been sunset from April 1 this year. But if you look at where the government's target is in terms of moving the needle on how much manufacturing sector has to contribute to overall GDP growth, right? It is absolutely imperative that the better rate benefit continues for that sector. Similarly, for the power sector, if you ask me, not only to aid the capacity addition, which is also the net zero target or the energy transition target for the government, but also to make the electricity more affordable for end consumer, it is absolutely imperative that the whatever tax benefit can be extended to the sector that is continued, right? So that would be one primary expectation, that the lower tax benefit is in some sense brought back, right? And when it is being brought back, it should be for a reasonably long period of time. If you have a proposal which brings back the benefit and only for a year or 2 years, it keeps the investor on the tenterhooks, right? Any sort of a tentative tax policy would be counterproductive to my mind, right? So that's one big one. The second one, which again the corporate taxpayer would expect, is some sort of reform mechanism in the current law, right? To deal with the dispute resolution framework. We all know that how much time a tax dispute can take in India and how cost expensive that can be. There is a case clearly for government to relook at how the dispute resolution framework can be optimized and in some way sort of discouraging the Indian revenue from disputing each and every single case, regardless of the stakes involved there, right? So those are two key corporate tax expectation I would say the industry and the business community will have. From an individual taxpayer standpoint, there's always an expectation that the rate will be lowered, or from a middle class taxpayer perspective, the threshold would be reduced. That would entirely depend on how much wiggle room the finance minister actually has, right? Given the fiscal discipline target she has for herself. So that I would call out as a very, very tightrope walk. I don't think there is a very significant room the government has to, sort of give dole outs in general, but a very strategic move around reducing the slab rate and at the same time trying to compensate this by way of having a sort of a certain class of taxpayer taxed at a higher rate.
Yeah.
Perhaps that could be a good balance to achieve.
It's a tightrope that the FM has to walk. Mr. Sighania is saying so. Mr. Sanyal, do you agree with him? Because now with the rising cost of living, where does the FM need to concentrate the most? If you're going to do some kind of tinkering, if the needle has to move, would it have to come through income tax or capital gains tax or GST rationalization? Where is there maximum room for maneuverability that you see for the finance minister?
Well, Vikram, if you see, every budget needs to deal with so many expectations that by definition it's almost a tightrope walk always. But having said that, I tend to say that the broad performance of the economy is relatively good. Growth is improving. Interestingly, from the rural side, where there was a lot of concern at some point of time, it looks like some of the indicators have started gradually improving. Inflation, globally, the concerns around inflation is coming back a bit, but still in case of India, it's relatively better managed. Fiscal deficit, we have seen it has steadily come down over the course of the last few years. Also, with the additional buffer that we have seen in the last few months, especially in the form of a decent tax collection or more so from the RBI surplus transfer, I think there is a bit of cushion in the hands of in the hands of Honorable FM. Now, what it will be very, very interesting to see that whether that particular additional resources that the government or FM enjoys at this moment, whether they will be directing it more towards immediate consumption boosting, which will be giving some kind of an immediate boost to growth, or they continue with some kind of an support to their investment driven programs. I think they can, at this moment, they can actually choose to go for a mix of both, and they have the resources for that. That's a good news. So I tend to believe that the broad nature of overall improvement in quality of fiscal spending that we have witnessed over the course of the last few years will continue. We are seeing a much higher share of capex in the fiscal maths in the last few years. My sense is that that continues. There is no urgency on the part of the government or the finance ministry to cut down their projected fiscal deficit or the borrowing number at this moment. Possibly they can afford to take a call on that at a later date. But in general, with the additional resources, they will start to allocate it with some ratio both to consumption and investment, and not focusing too much on cutting the fiscal deficit right away.
Sanyal, like you heard the economist's view on this as well. Siddhartha Sanyal believes that there is room for maneuverability over here. Of course, in the interim budget, the finance minister neither tweaked nor put any additional tax burden on citizens. But one understands that it was an interim budget. But as a matter of policy, how have we done over the last 10 years when it comes to rationalization of tax slabs, easing out complex rules, governing taxation in a way that would even widen the tax net and hence spread out the burden on existing taxpayers? How have we done?
Sure, if there's a question for me.
Yes.
Yeah. So if you look at the last 10 years, right, just number of tax filers in 2014 stood at about 3.7 crores or 3.75 crores, 3.775 crores. As of 2024, the number of tax filers is close to 8 crores, right? So clearly the compliance net has grown, right? And number of tax filers have increased. And large part of that can be attributable to just the drive that government has shown in terms of driving the voluntary compliance, reducing the tax rate progressively. The slabs have increased progressively for individual taxpayer. Also the corporate tax side, right? Like I was talking about the lower tax rate for certain class of taxpayers. All of that have in a way incentivized voluntary compliance, and that has led to the growth of the number of tax filers in India, right? Is there a room for that to continue and become more accelerated? Absolutely, yes, right? That drive has to continue because I think we're still in a country of 1.4 billion people. 8 crore tax filer is very minuscule amount, right? Or proportion. So I guess the focus in a large way from a tax reform standpoint has to be on driving more and more tax compliances. And that can be through one or two sort of policy measure. One would be to try and reduce the burden of the cost of compliance increasingly and progressively. Again, as much digitization can come into the process of tax filing. We're already seeing the benefits of digitization. As you see, even as an individual taxpayer, your pre-filled form gets downloaded from the income tax website, right? I think as that keeps improving further, the cost and the time taken in the voluntary compliance will significantly improve, right? And that will again sort of significantly aid into increasing the number of people who come within the tax net. And it not only sort of helps the corporate tax collection, it also sort of goes for the government to create the data analytics on the other tax collection that it can sort of ensure, right? So that's an important part. The other part would be to try and bring more and more taxpayers within the net from a corporate tax side as well. And that's where the tax administration reform will be crucial, as well as the tax litigation reform will be crucial. So those are the things. If you come to think of it, right, from a direct tax standpoint, the current law itself will make a case for, in a sense, overhaul and trying to see if the government can propose a new direct tax code to be written, right?
Correct.
There is enough room for laws to be simplified. And also, if you take an example of capital gains tax structure, right?
Correct.
For a number of years, we've been talking about this is like a law in itself within the income tax law.
Correct.
Can that be simplified further? Can this be a simple structure of a short-term
Well, there
capital
is
gains
talk
being
of
taxed
some
at
kind
a-
of parity coming through. Yes? If there is a parity
Yes.
in the different asset classes when you talk about capital gains tax, is that going to be of help in general to ease it out? And of course, like if you bring in real estate at par with equities, does it mean that we'll have that many more property deals taking place and property prices will rationalize? Do you think that's likely?
Yeah, so I won't go that far of sort of bringing the parity between the financial asset and the non-financial asset, but within the financial asset classes also, right? Whether it's a shares and debenture, within shares, it's listed and unlisted. There's huge amount of disparity in terms of the tax rates right now and the period of holding within which a capital gains will be regarded as a long term and the short term. I think that is the first part to be sort of structured in a different way right now. And perhaps there is still a case for non-financial assets like real estate property to be considered long-term over a period of 3 years, whereas shares can be considered long-term for a period of 12 months. So I guess we need to take this into steps. As long as there is a simpler tax structure which says long-term shares or long-term financial securities would be taxed at 10%, short-term will be taxed at, let's say, for example, 15 or even 20%. That in itself is a significant reform and will drive massive amount of the voluntary compliance. It'll also shore up some tax collection, right? Because you can always wonder how many individual tax filers actually correctly file their tax return, not knowing exactly how the taxes would apply on the capital gains structure, right? So I think that's a critical piece in terms of overall capital gains tax reform.
Well, Mr. Sanyal, when Nirmala Sitharaman, as Finance Minister, rises on the 23rd of July in Parliament to present the Union Budget this time, it's going to be her 7th time in a row. Last fiscal, she hit the fiscal deficit target of 5.6%. But now, with the kind of revenue buoyancy there exists, tell us how crucial do you think it is for the Finance Minister to spur consumption and perhaps by offering some tax stops to citizens? How crucial is it for the Indian economy at this stage?
I try to answer it in two parts. One part is in terms of boosting consumption, and the other part is tax ops. I'm much more confident and hopeful about the first part. The second part we need to figure out. In terms of the first part, I think the focus is very, given that the government has done a lot in terms of large ticket capital projects. My sense is that there might be a renewed focus on a lot of small ticket items at this moment, which actually touches millions of lives, make a difference at the grassroots level, make a bigger difference in case of the rural economy, and provide a little bit of additional support, given that that part of the economy has started turning around. It will be very, very helpful if we can provide that additional support. My sense is that they will try to figure out how exactly they can provide that additional support, not necessarily in the form of subsidies. I don't think that is the preferred route, or there may not be much of a need for that. But some catalyst kind of initiatives, spendings, etc., which can actually crowd in a little bit of additional private sector activity. The same is true in case of broader investment spectrum also. That last few years we have seen a lot of focus on the part of government to spend on investment projects. My sense is that now they will be focusing a little more. If there is any more low-hanging fruit left in terms of spending a little amount of money and actually spur a little bit of private capex, because that is the part in the economy which is actually lagging, and it has been a bit lagging for the last at least 4 or 5 years, if not longer. So gradually there will be slight more focus on that. So that's my expectation in terms of their spending mix. In terms of the tax ops, I'm not. It will be a pleasant surprise if we see something meaningful. but a little bit of support here and there is expected, given that they want to move the needle to support consumption a little more.
Yes, you're absolutely right in pointing out that the heavy lifting when it comes to CAPEX has been done by the government, and perhaps incentivizing more private CAPEX at this stage would do well, especially if the kind of fiscal prudence targets that have been set, they are being conformed to, and we are moving ahead in that direction as well. Then perhaps more tax stops to put consumption up front. That perhaps could also change India's investment patterns, because there is a shift underway. The money that would be parked in fixed deposits, in gold-related products, a lot of it now going into equities and derivatives today. Now, how the government, through the budget, is going to balance India's investment climate, that's going to be an important piece as well. More towards savings, more towards retirement planning, creating more financial security for senior citizens. How is that going to be achieved, even as our economy grows? All of these are moving pieces, and we are watching them very closely. Thank you indeed for joining us, Mr. Sanyal, Mr. Sighania. It's a pleasure getting in your perspective on the possibilities in the union budget this time. We'll keep connecting with you, but thanks for joining us on the show. Meanwhile, from Amrit Bharat train for the masses to running the Vande Bharat sleeper trains, the Railway Ministry is eyeing a massive transformation when it comes to the passenger segment in all the cities and towns with populations of 75,000 people or more are to be connected through a rail network, is what we are picking up from sources who are also telling us that this transformation roadmap is going to be part of the upcoming railway budget. Let's find out what's in store over here. This big fillip for railway passengers that we are expecting. My colleague Samir Dikshit knows more about this. In fact, he's joining us from Delhi. Do tell us, Samir, what have you heard about it, about the kind of spur that railway passengers could get in the budget this time?
In the upcoming union budget, the government is going to have a big focus on the railways sector. What we are picking up from our sources that the budgetary allocation for FY 24-25 for railways could be somewhere around 3 lakh crore. The entire focus will be on transforming the passenger trains. So there is going to be a focus on Amrit Bharat trains, which are popularly known as Jan Sadharan trains, or it will be focused for the travelers who are there for non-AC coaches. So for this year, government is targeting to run 25 Amrit Bharat trains, and out of those 25, 2 trains are already running on tracks. Apart from Amrit Bharat trains, Vande Bharat train is another key focus area. So first prototype of Vande Bharat sleeper version will be out. It will be on a test run by 15th August this year itself, and then the larger numbers will be out on tracks. Vande Bharat trains, the chair car based trains, so more than 2 dozens will be out this year itself. Vande Metro train, which is designed for intercity of up to 150 kilometers of journey. So Vande Metro train is going to be out very soon, the test, and then the regular rollout of Vande Metro train is likely to take place. Another important or the interesting aspect is that Railways is eyeing to connect such cities or smaller towns having a population of up to 75,000 numbers or more than 75,000 that will be brought on the railway network. So these cities or the towns which are left, so that will be connected through the railways. So that's one important aspect as well. In the freight side, government is targeting to upscale the freight revenue by 20% this FY. So these are a couple of interesting target or the numbers that Railways is looking for itself. But if you see that Vande Bharat or the Amrit Bharat trains are going to be key focus area, and yes, 10,000 non-AC coaches production will is likely to be announced in the budget as well.
Samir, we are looking forward to all these developments, more for the common man, the Aam Aadmi, when it comes to the railway budget this time. All of it is going to be something that is going to be very closely watched. And of course, we'll be getting you all the news, all the information, and analyzing it for you as well as the details come through. But this is what we're picking up as of now.
If you like this video, then like, share and subscribe to ET Now.